Ladies and gentlemen, welcome to the most electrifying business showdown on the planet. In the red corner, worth $1.32 trillion, the American electric vehicle titan, Tesla. In the blue corner, the Chinese manufacturing giant that just beat Tesla in revenue for the very first time ever. BYD, 8 rounds, real data, no spin. Let's get it on. Round 1, revenue. For the first time in history, BYD out-earned Tesla on the top line. BYD pulled in $116 billion in 2025. Tesla made $94.8 billion. And here's the gut punch. That was Tesla's first ever annual revenue decline, down 2.9%. Now, before Tesla fans lose their minds, remember this. Tesla kept far more of every dollar it made, but on pure revenue, BYD just rang the bell. Round 2, net profit. This is where Tesla hits back hard. Tesla made $7.1 billion in net profit in 2025. BYD made $4.7 billion, and that number was down 19%. BYD's first profit decline since 2021. So here is the paradox. BYD makes more money in total sales, but Tesla makes more money at the bottom line. Tesla earns more from every single dollar of revenue. That is a fundamental difference in business model that every investor needs to understand. Round 3, gross margin. This one surprises people. BYD's auto gross margin is 20.5%. Tesla's is 16 to 18%. BYD actually keeps more from each car it sells before operating costs. But here is the catch. BYD's net margin, after all expenses, collapses to just 4.1% because of massive research and development spending and the brutal domestic price war in China. Tesla's net margin stays stronger. Two different strategies, both with real logic behind them. Round 4, research and development. This round belongs to BYD, and it is not close. BYD spent $4.3 billion on R&D in 2025, up 53% in a single year. That is number 1 among every single company listed on China's stock exchanges. They are not slowing down, they are accelerating. Tesla is pouring money into AI, robotics, and the Optimus humanoid robot. 2 companies betting their entire futures on technology. The question is, whose bet pays off first? Round 5, cash and debt. Tesla is sitting on $41.6 billion in cash with only $5.5 billion in long-term debt. That is one of the strongest balance sheets in the entire automotive industry. BYD carries about $7 billion in total debt. But here is what matters. Their leverage ratio is falling every single quarter. BYD is getting cleaner. Still right now, Tesla's vault is bigger, its debt is smaller, and its financial strength score is 9 out of 10. Round 6, stock valuation. Tesla trades at 327 times earnings. 327. The market is not buying a car company. It is buying a bet on AI, robotaxis, and a future where Tesla's software is worth more than every car on the road. BYD trades at 28 times earnings, and it pays you a dividend of $1.10 per share. Tesla pays 0. 2 stocks, same industry, completely different investment thesis. Which bet are you making? Round 7, global deliveries. BYD sold 2,256,000 pure electric vehicles in 2025. Tesla sold 1,636,000, down 8.6%, the biggest annual drop in Tesla's history. BYD dethroned Tesla as the world's #1 electric vehicle brand. But zoom into the map. In the United States, Tesla still dominates completely. In China and Europe, BYD is on fire. Europe's sales jumped 185% in February 2026 alone. Geography is destiny in this battle. Round 8, the future. Tesla is launching its robo-taxi service in more than 30 American cities this year. Full self-driving just got approved in the Netherlands, opening the door to all of Europe. A cheaper Tesla model is in development. Meanwhile, BYD just unveiled the world's first 9-minute battery charge, 10 to 97% at 1,500 kilowatts. They are building factories in Hungary and Turkey, targeting 1.5 million overseas sales this year alone, and spending more on research and development than any other company in China. 2 companies, 2 visions. Both could be right. And the scorecard is in. BYD wins revenue, wins global volume, wins value pricing, and wins the scale game. Tesla wins net profit, wins cash strength, wins the United States market, and wins the AI and autonomy narrative. There is no knockout here, ladies and gentlemen. This is a split decision. 2 companies, 2 strategies, 2 completely different bets on the future of transportation. The question is not which one is better. The question is which one is right for the next 10 years. Tesla earnings drop today, April 22nd, after market close. The rematch starts now, same time next quarter. Before you go, smash that red subscribe button right now and hit the bell so you never miss a battle. Then drop your vote in the comments. Type Tesla if you think AI and robotaxis win the next decade. Type BYD if you think scale and factories take over the world. And tell us what battle you want to see next. Apple versus Samsung, Nvidia versus Intel, Amazon versus Alibaba. Drop it in the comments below. The business battle is just getting started. See you next